Welcome back. This is Corporate Radar, and the stock that we're looking at right now is Ramkrishna Forgings. Q3 was actually a very strong quarter for them. So you had a revenue growth of 36% this time around. The EBITDA was up about 30%. That's on a consolidated basis. There was a strong pickup in the domestic market. The stock is absolutely flat right now. Naresh, Jalan, the managing director at Ramkrishna Forgings, joins us now to talk about that. Mr. Jalan, thanks a lot for joining in. I want to first start by asking you about the volume growth, right? In this quarter, the volume growth was very strong, 25% growth, largely led by the domestic market. Want to understand, is this a sustainable performance in Q4 as well? What are the demand trends looking like now? And what's the outlook for FY25?
Good morning, Sonia. I think demand trend is absolutely intact and we are doing extremely well, both in the domestic market as well as in the export market. And that is what has driven the third quarter volume growth. And I think this is sustainable and we are going to build up from here also. With the kind of capacities we are building in, I think this is the start of the traction in the volumes.
Okay, so can you give us a number? What are you looking at? I mean, you've done 9 months at about 118,000 tons. That's a growth of 23%. By the end of the year, by the end of FY25, what are you looking at in terms of growth in volumes?
So by FY24 end, we should be doing close to around 145,000 tons around capacity utilization.
Okay. The overall installed capacity is how much, sir, now? Okay, I think we lost the line there. We'll try and have him back in just a bit from now. But I think, while we wait for Mr. Jalan, let's just take a quick look at the market as well. 176 points on the Nifty. So, yeah, I mean, there is that bounce, which is at this point in time still staying. We, just to take a look at the index, I think we are at opening levels. Or have we given up? Let me just quickly see. I think we've given up a little bit, but not by much. The open was 21,615, and we're actually above that. So 21,631 is where the index is at, about 15, 20 points above where we opened. So essentially flat line from that point on. Do we have Mr. Jalan? Okay, Mr. Jalan is back with us. Mr. Jalan, good morning. We lost you. There's Prashant this side. No, I was just asking you, what is the total installed capacity as of now?
As of now, Prashant, installed capacity is 210,000 tons.
210, and you're saying that you hope to utilize 145.
160.
160 by when, sir?
By this year end.
Okay, by the end of this year. And that would translate into revenue. So what's the number that I have is that by FY25, revenues potentially, because of capacity expansion, etc., could go up to about 5,000 crores. Could you give us an update?
Again, we have lost Prashant.
I can hear you very clearly, sir. Can you hear me?
Hello.
Okay, I think Mr. Jalan, can you hear me?
Mr. Jalan, is our voice reaching you? Okay, I don't think you can hear us. So we'll get back to that conversation in a bit. But the stock is holding up almost about 0.3%. Let's take a quick check on what's happening in the market. Hudco, by the way, is one of the stocks of the moment. Look at that. It's a 14% rise that we're seeing in the Hudco stock as we speak. NBCC is up almost about 6%. Honasa has come back in a big way, up about 5%. Poonawalla FinCorp has been looking quite good. Oracle Finance as well. Easy Trip too has been gaining ground because of this whole, wave of domestic tourism that we're seeing, especially with the Ayodhya opening, etc. So Easy Trip is up about 3.5%. And then you have something like an IRCTC. I think this whole tourism, related stocks are all looking really good today.
Yeah, and you mentioned Hudco, Sonia. I think it's the entire PSU pack once again. I mean, that's because there's IRFC, there's IREDA, NBCC, and many others which are participating on the upside. I think we've got Mr. Jalan on the phone line. Some issues there with the audio. Mr. Jalan, if you can hear me, sir?
Yes, I can hear you, Prashant.
Okay. No, I was just trying to understand. We got the capacity numbers from you. You told us that by FY25, revenues should go up to about 5,000 crores. Can you provide us with an update? Are we on track on that because of the capacity expansion, etc.?
We are on, Prashant, we are on track to achieve our numbers.
I think if you see the 9 months results and the fourth quarter is yet to come, post this fourth quarter, I think the entire visibility for 5,000 crores FY25 will be visible.
Okay. You had guided for FY26 revenues at 6,000 crores earlier. Can you tell us how much of this is going to be through the organic route, how much through the inorganic route? What are the plans there?
I think we are done with our inorganic growth as of now, and I think we are consolidating all the inorganic growths which we have made. So I think with this, whatever we have made right now, we are on track to grow our balance sheet and we aspire to be at the 6,000 crores number. But still depends on how commodity moves on from here. But in terms of volumes, in terms of businesses, we are on track for 15 to 20% volume growth.
So this board note to raise 1,000 crore rupees via a QIP, what will the funds be used for? Because you're just saying you're largely done, on the inorganic front.
So I think if you see the overall debt of the company has considerably gone down. I think we are at 590 crores of net debt as on 9 months, and our target is to by next 2 years to be almost debt-free company. So I think that's the vision we are working with, and I think with the kind of growth we foresee, I think we believe that we will be able to achieve the vision which we are working with.
And when will you raise this QIP money of 1,000 crore rupees?
We have already raised. I think that's already over, I think.
Okay, got it. So you're saying your target is to be debt-free over the next 2 years. Got it. The last time you had said that you're hoping to surpass double-digit growth in the railways business. Can you tell us this JV, right, with Titagarh, it will start accruing in FY27. But before that, you don't expect any incremental orders to come through in the railway business? Just trying to understand in the non-auto side, what are the opportunities that you have?
In non-auto segment, railways and off-highway business is both doing extremely well for us. And we are on track for FY25 double-digit growth in railways as well as off-highway. So both these segments taken together, I think our overall exposure to the automotive segment is going to considerably come down. And we aspire to be almost 30% non-automotive business, and we are on track to achieve that.
Railway as a proportion of the overall business, that is under 5%, right now?
Yes, around 4% right now. And we are looking at almost 10% by this FY25 end.
Oh, wow. I mean, basically, the share to double from more than double from where you are in a year.
Yes.
So is there a big difference in the margins of the railway business and your core margins?
I think railway business, being a very specialized operations, has a better business, better margins actually.
Okay. Do you want to put some number to it? Better margins is?
No, I think it should be 100 to 150 basis points more than what we do for automotive segment.
Okay. So just one final question. The 6,000 crore target by FY26, you're saying that all of it will be organic, right? There won't be any inorganic, because last time you had told us that you are looking at some acquisitions as well in some of the complementary spaces. So just wanted to get an understanding on that.
So I think we had just closed on the ACIL MTech through NCLT. So I think we have 3 acquisitions within last 3 months time. And I think for next 1 year or 2 years, we believe that we should be consolidating all these acquisitions in RKFL. And that is the way forward. And I think with all these acquisitions, we are on track to achieve the volumes which we predict we will be able to. And with all these new customers which have come on board with these acquisitions, I think to cater to and cross-sellings which are going to happen through RKFL also, I think we have a huge opportunity and huge task in our hand to consolidate everything.
So ACIL, last time you said that 500 crores is a revenue that you're looking at in 2 years post the acquisition. Are you on track to do that, or is there any updated figure that you want to share with us?
No, we are on track to achieve within next 2 years by FY26 end. We are looking at almost 500 crores revenue from ACIL.
Okay, all right. Mr. Jalan, we'll leave it there. Thank you very much for your time. Good speaking with you here on CNBC TV18. Good luck, sir.